What's SFR driven on?
Location, schools, crime rates, a lot of emotional factors, community that you want to be in. Multifamily is 100% economics, right? For us, it's what's the income, what are the expenses, what's my cap rate, and does the deal pencil? We care about location, obviously. We want to be in the right markets, but our decision about being in the right markets are not qualitative, they're quantitatively driven, right? Like we went out into a market in Ohio in multifamily driven on a housing shortage and the ability to bring 800 units on in a market that had a need for 12,000 units. We are heavily focused on California based on quantitative measures. For me, looking at a home, I want to be in the community near my kid's school. I want to be in the community that people that I know. I want to be in an area that's low crime. It's not economically driven whatsoever.
So SFR cares about your feelings and multifamily cares about facts?
Sure.
I like that. As far as the Fed expectation, because everything that we were hearing 2 years ago was survive till 25. The expectation is that the Fed was going to start reducing rates at some point in 25. And we did not see that at the last meeting. We didn't see that at the meeting before. Where do you think we land right now on Fed expectations on what they're going to do with rates?
I don't think we're going to see rates go down for probably another year at least.
You don't?
Like in a material way.
Okay, we'll take material out for now. When do you think the next interest rate reduction is?
Oh, aren't they forecasting like 6 months from now?
Two
Is
meetings?
what they're saying?
Yeah, that's what they're saying. So expectation is in two
Maybe
meetings.
Maybe we'll see another 25 basis point drop at that point in time.
Or 2 quarters.
Two quarters.
Okay, so what's interesting is I think maybe you could make the argument that before this whole Liberation Day came about, Fed might have lowered interest rates this last meeting. The tariff situation kind of, I think, really jammed up, at least for us, rates coming down, right? Because if one of their goals with combating inflation is the interest rate control or lever, if they had an expectation that inflation was going to rise, I don't think they were going to lower rates anytime soon, right?
Right.
As we're starting to see deals getting done and that tariff rate come down, at least significantly where it was, China was like a big, I think, indicator of where we're headed. I think it is reasonable to say interest rates 2 quarters from now drop.
By how much?
I think 25 bips is the call.
So the question then becomes, does 25 bips move the needle to where deals now make sense?
Well, no. Like if 25 bips makes a deal work for you or not, it's probably a bad deal. But I would probably argue that as you start seeing rates come down, maybe your forecasting changes on your underwriting. And so that might turn on the people that are more long-term in development, right? Like for us looking at a new deal today, we're not starting that deal for 3 years from now, right? So maybe your underwriting looks different. Maybe your pro forma looks a little better. I don't know. That's a good question.
Yeah, but we're still earmarking higher interest rates in the deals that we're underwriting today. I think the bigger issue is though people that were doing deals 3 years ago, 4 years ago, that were relying on sub 4% interest rates that are stuck now because their deals no longer pencil and they're just basically trying to wait this thing out.
Yeah, for them, I don't know. Like, have you been seeing a bunch of products hit the market that are distressed through the situation you just said?
No, because I think people are still bleeding cash, just trying to wait this thing out before they start unloading assets. I mean, we are seeing a lot more deal flow right now. That's for sure. Have we seen the level of deal flow that I think we're going to see? I think it's going to continue ticking up, especially as long as interest rates stay high. And remember, people are not waiting for rates to go sub 5. They're hoping that they go back to like the 3.5 to 3.75.
Yeah, they're wrong with that.
I agree.
Yeah, they're wrong with that.
But if they modeled the deal thinking that they had to be at 3.75 or call it just under 4% in order to do the deal, which a lot of people did and took out a huge amount of leverage in order to make that happen, they're in a bad spot.
Okay, so considering you're not in survival mode with a deal that is distressed, right? Let's talk about new deals moving forward. how significant is a 25 BIP reduction? Also considering that cap rates have like significantly softened, right? Like where were cap rates in 21 for like a Class A apartment in LA? Sub four?
4, sub 3.5 in some cases.
Okay, so if you're let's just call it 4 to be generous. Now they're trading at like a 5.2 cap, 5.5 cap.
It's massive.
Bro, that's massive. That's more than the financial crisis.
Well, here, let's do.
You want to do some math?
I mean, let's just to draw the example, right? If you're talking about,
Let's say I have a project generating $2 million of NOI at a 4 cap. What am I valued at?
$2 million at a 4 cap is a $50 million valuation.
Okay, so how much money did I lose in value if it's now a 5.5 cap?
$2 million at a 5.5%, 36.3 million.
So I've lost $14 million in the cap rate moving, unrealized loss in the cap rate moving that much.
By 125 basis points.
Okay, so then let me ask you this. If things are trading at a 5.2 cap, where do you think interest rates need to land for stabilize and maybe some of the light value add strategy to work again?
For it to work, like to just wait it out, or for you to actually make money?
Good question.
If you need it to wait out, you need them to be almost at parity with each other.
At what point do we start seeing that strategy come back into play for new dollars?
200 basis point margin between financing rates and cap rates.
Okay, so then does that mean that cap rates have to climb higher if interest rates are not going to go sub 5?
They do. Yeah, so if you're borrowing at 5.5, you probably want an asset that's trading at a 7.5 cap rate if you want to make some money on it.
Okay, so then walk me through that. If brand new product was trading at a 4 cap, like you're like Freddie Fannie, you weren't getting a 2% loan. How was that working?
Well, you're talking about back in the lower interest rate days. Well, you were borrowing closer to like 3.25%, 3.5%, and you were trading at a 4%. That's what you're saying. How did those deals work?
Yeah.
Those deals weren't necessarily trading actively. Those deals were a lot of buy and hold positions.
So they were just letting rent grow.
Yeah.
And that's how they're capturing their spread. How significant is baby boomers moving out of single family homes and into senior living? Do you think that we are going to see baby boomers at scale need to move out of their single family? And if so, do we have the supply to handle that?
I don't think we have the supply in the assisted living space in order to offset the increased baby boomer relocation. I think it's a great asset class, but it is very complex.
For the seat, because we have it's not some. We have one apartment where you have to be 55 and older to be in.
Correct.
But then there's also assisted living.
Right. I'm talking more on the assisted living side.
On the assisted living side.
Yeah, I mean there's nursing facilities, assisted living facilities, there's a lot of compliance that goes into those, so it's not just building housing, it's a very unique level of asset class. But I think the demand is pretty significant there.
So do you think we're going to experience what we are seeing right now, which is astronomical rents and pricing? Will we also see that in the assisted living space if there are too many baby boomers coming in and not enough supply for them?
Yeah, I mean, again, the economics don't change. If you have a huge demand and not enough supply to offset that demand, prices are going to go up. If you have way more units and not enough demand, everybody's competing for that smaller population of people. So people are going to compete on pricing. Prices are going to come down. It doesn't change depending on what you're talking about.
Maybe this is going back into your old.
You love tapping into my old financial advisor days.
Yeah, I'm going to ask you a financial advisor question. Did you have any clients that worked with you whose parents were going through the like elderly stage and potentially into assisted living? And did you have to work on financial planning for, let's say, a millennial on how they're going to help their parents? Like, what is that scenario like from an investment standpoint if your parents are not financially free or set up for that? Is it the kids taking that on, and how do you plan for that?
Yeah, it's actually, interestingly enough, it's very culturally driven. So depending on the culture, some cultures will take the parents into their home. Other cultures will tell their parents, go to an assisted living care center.
You guys do that.
We generally have parents move in The Middle Eastern culture is very much oriented that way. I'm not saying one is better than the other, just every culture treats it differently.
Yeah. You know what's funny, Jen, my wife's been talking about this a lot, that was kind of the old school way to do it. But there are a lot of elements that are nice about that. Like when you have grandma or grandpa coming in, there's a lot more support you get with the kids. That is kind of nice. It's almost like a all hands on deck scenario.
Yeah, it's definitely easier for the parents in one way, but in the other way, the parents are also now responsible for taking care of elderly parents.
Yeah, if you have
Elderly grandparents.
Yeah, and if you have a tough one.
Yeah.
Like if you have like an insane mother-in-law.
Yeah, so on that note, the assisted living center or elderly care facility, that plays into hands, and some people are financing it. I mean, listen, Medicare and Medicaid kind of steps in, but you're not getting a good quality facility for that cost. And so, a lot of kids are having to come out of pocket, and it's expensive.
Yeah.
Which is why long-term care plans were so in probably like 10 to 20 years ago.
Right.